Hello, it's Jim Wade. I'm a tax attorney here in Maine, and in this series of videos, I'm going to be talking about IRS tax levies. That is when the IRS seizes assets owned by you. We'll talk more about that in a moment, but oftentimes people get confused. They get a lot of correspondence from the IRS, one of which is saying the IRS is going to file a lien against your property. That is not an asset seizure. When you see the IRS is going to levy you, you got a problem. So this episode and the next three, we're going to be talking about how you know that you're in this situation where you have to worry about a levy and what you can do to fix it, and then how to avoid it in the future. This one's going to be a little different than a previous series I did on innocent spouse relief, because I'll be doing this using a client story as to sort of make it a little bit more interesting than sort of dry reading of rules and regulations. Innocent spouse was a little bit harder to do. A lot of those are so complicated, it's hard to keep simple. But in this one, we'll be talking about Dave and his company and how we took care of his bank levy. So let's get started. So a tax levy is nothing more than the IRS seizing your assets, and that can come in a variety of different means. The IRS can seize money in the bank. They can garnish your salary or wages. They can seize money that's due you from customers, clients, patients, or tenants. So if you're a landlord, you've got to watch out. The IRS can seize money due to you. And then they can also take Social Security benefits. So for those of you who are elderly or disabled, you need to be very concerned, because the IRS, if you have a back tax debt, can seize your benefits. Now, they can seize it. It doesn't mean that it's going to be there permanently or it can't be otherwise resolved, but just note that they can do it. So let's talk about Dave. Dave is an owner of a small manufacturing business. He had 4 full-time employees who assisted him in fabricating the product. Before he contacted me, he had been working with the IRS for back income taxes and payroll taxes. But for some reason, he was working with a national company, one of those national firms you hear on the radio and TV, and I don't know what happened. I don't think they understood, and certainly the national company is not going to talk to me about this to find out what happened, but they resolved the income tax debt with a payment plan, but not the payroll taxes. So the IRS went in and seized about $3,000 from his bank account, which isn't a huge amount of money, but he really needed it to make payroll in a couple of days. So that's the table as I'm setting it. Dave calls me, the IRS seized my money, and I got to make payroll. So we're not going to talk about how we get it resolved in this episode, but let's at least touch on what had to happen before the IRS could levy Dave. So first, the IRS just cannot go in and seize your assets. I will oftentimes talk to clients or prospective clients who believe they have some back tax liability the IRS hasn't assessed yet, meaning that the IRS isn't aware that they owe money, and they think that the IRS can immediately go into their house and take their stuff and just financially wreck them. Well, that's not true. The IRS has a process it has to go through. And so you can see here on the screen, there are the notices that have to go through first before they can send you this final notice, which is their sort of way of saying, hey, you better do something now or we're going to seize your assets. So let's go down that list real quick. Now, where you see CP and LT, those are just basically they're identifiers for the IRS. They know what's being sent out. These are computer-generated letters, and so CP stands for computer paragraph, LT stands for letter. It's not important to you in the sense of you don't need to know what CP is, but what you do want to do is when you get correspondence from the IRS, open the mail, look at it in the upper right-hand corner. You will see either a CP or an LT followed by a series of numbers. That's important. So in this particular case, if you owe money, let's just keep it simple. let's say Dave filed his income tax return on time, but he didn't pay all the tax. There's a balance due. So what he's going to get first is a balance due notice, that's CP14. If he does nothing, then he's going to get about 28 days a CP501, and then a 503 and a 504. They're about 28 days apart from each other. So you figure you're looking at 3 to 4 months for all these sort of CP notices to be sent out. Then another 28 days, he's going to get a final notice. It can come in numerous forms. It can be either an LT11, an LT1058, or CP90. Doesn't really matter. What you're looking for is, hey, final notice of intent to levy. Sometimes they change the wording, but if it just says, hey, look, we're going to levy you if you don't contact us to work this out, it'll give you 30 days to do it or request what they call a collection due process hearing. So if you see anywhere in the notice where it says collection due process hearing, you're looking at a final notice of intent to levy. There is one that'll have a CD collection due process hearing for a tax lien, but we're talking about if the IRS is threatening to seize assets and they're telling you got 30 days to do it or request a hearing, for collection due process hearing, you got a problem. So in Dave's case, the IRS had sent him all these notices. Now, he thought that the national firm was taking care of it, but when they didn't, he hadn't requested a hearing, so the IRS could take action to seize his assets. In the next episode, we're going to be talking about, what property is impacted by these tax levies, because the IRS can't come after everything. So hopefully you'll join us for that next one. If you have any questions about tax levies or anything else related to the IRS, give us a call. More than happy to talk to you. Have a great day.